We are seeing one example on final accounts. The following is a trial balance of A as on 31st December 2001. Okay, particulars are given and then debit amount and credit amount is given. Okay, and below that there are some adjustments will include all the entries that are pending. Then there may be some entries that may have some errors. Okay, so we'll see it one by one. Now we have prepared the format of trading and profit and loss account. So what we have done is trading and profit and loss account, a combined trading and profit and loss account is prepared, and then balance sheet as on 31st December 2001. Okay, that is what we have prepared, one format. Okay, so now let's see all the items one by one. The first is purchases. Okay, so purchases is having a debit balance. Now purchases is a nominal account, is an expense account, correct? And since it is a part of cost of goods sold, it will be included in, this is an expense account, correct? So since it's a part of goods sold, it will be included in trading account, debit side. Okay, debtors. Now debtors is a personal account, correct? So personal account, and it is showing a debit balance, correct? So it will be in balance sheet asset side. Next, interest earned. Okay, interest earned is an income. Okay, now since this is a indirect income, it will be included in profit and loss account, credit side. Okay, salaries again is an expense. Okay, since this is a salaries, okay, it's not wages. Okay, so this is assumed as the salaries to the employees that are not part of a factory. Okay, some salaries to the employees sitting in the office, so they are not part of cost of goods sold, so they will be included in profit and loss account, debit side. Then sales is an income, correct? And since this is a direct income, it will be included in the trading account, credit side. Okay, then purchase returns is having a credit balance. Okay, now this will reduce our cost of goods sold or purchases. Okay, so we will reduce from purchases in trading account. Okay, so here we have to reduce it from purchases. Then wages. Now wages means generally wages of factory workers. When the word wages is given, it is wages of factory workers. Now wages is showing a debit balance, it's a nominal account. Expense. Now since this is an expense related to cost of goods sold, it will be included in trading account, debit side. Okay, then rent. Now rent, it's not given whether it's a factory rent or an office rent. When nothing is specified, we assume that it's a indirect expense. Okay, so rent is an expense, nominal account, so it will be included in profit and loss account, debit side. Then you have sales return is showing a debit balance, so we have to reduce it from sales to show the net sales in trading account. Okay, then bad debts written off. Bad debts written off is bad debts which are incurred. Okay, again bad debts is an expense. Okay, now bad debts will come under your selling and distribution expense. They are not directly related to cost of goods sold, so expense, P&L, debit side. Then you have creditors. Creditors is a personal account, it is showing a credit balance, so balance sheet, liability side. Okay, capital again is a personal account, balance sheet, liability side. Now drawings drawings is also a personal account. Okay, but instead of showing drawings in balance sheet asset side, what we are doing is we'll reduce it from capital, okay, in the balance sheet. Okay, this is one way of presenting the drawing. So as to show a net capital. Okay, so a person has say introduced a capital of rupees 1 lakh, but he has withdrawn some 200 or 300 rupees within the year. Then 1 lakh minus 200 rupees which is withdrawn, then so net will be your capital during the year. Then the next is the provision for bad debts. Okay, so provision for bad debts, again provision for bad debt, that's is your, it's like your personal account. Okay, representative personal account. Okay, so if showing a credit balance, but since the bad debts are related to debtors, what we'll do is we'll reduce it from debtors in balance sheet asset side. Okay, then printing and stationery. Printing and stationery is again the nominal account expense, correct? But since this is not related to cost of goods sold, it will be on the profit and loss account debit side. Insurance. Now this insurance is not given whether the insurance is for the purchase of goods or sale of goods. When it is not specified, we assume that this is an indirect expense not related to cost of goods sold. So profit and loss account debit side. Then opening stock. Opening stock, as explained earlier, will be trading account debit side. Okay, then office expense. Again, office expense is a nominal account showing a debit balance, so it will be profit and loss account debit side. Then furniture and fittings. Okay, now furniture and fittings is an asset of the firm or a business. Now it's an asset, so it will be balance sheet asset side. Furniture and fittings will be a real account. Provision for depreciation. Now provision for depreciation, what they have done is instead of reducing the depreciation for the year from the furniture and fitting accounts, the furniture and fitting account is shown at a cost, that is 2000. Okay, and provision for depreciation is shown separately, so it has to be reduced from asset, that is furniture and fixtures. So it will be reflected in the balance sheet as an item reduced from your asset. Okay, now we'll see all the adjustments that are given here. Okay, and let's see what all accounts gets affected by this adjustment. Depreciate furniture and fittings by 10% on original cost. So now see the furniture and fittings. Okay, the cost of furniture and fittings is 2000. Okay, depreciate it at 10% of the cost, so 10% of the cost will be rupees 200. Okay, so depreciation entry is pending, which we need to pass. So what will be the entry for depreciation? Depreciation account debit to provision for depreciation. Instead of 2 furniture and fixtures, we'll put 2 provision for depreciation, since the provision for depreciation account is created. Okay, so depreciation account debit and provision for depreciation will be credited. That will be the entry. Now one effect will go to your profit and loss account debit side. Okay, profit and loss debit. Provision for depreciation will be credited, so credit balance of provision will increase, so I'll put a dot here. Okay, so that you understand that there is one adjustment in provision for depreciation. Okay, then next, make a provision for doubtful debts equal to 5% of the debtors. Okay, so provision for doubtful debt. There is already some provision for doubtful debt. How much is that? Provision for doubtful debts is given. So how much is it given? 600. So we have to make a provision for doubtful debt at 5% of debtors. What is a debtors balance here? Debtors. Where is debtors? Debtors is 20,000. So 5% of the debtor. So 5% of 20,000 is 5% of 20,000. That is nothing but 1,000. Okay, so already there is a provision for bad debts here, which is given at 600. Okay, so there needs to be some additional provision which is to be done. Okay, of rupees 1,000 minus 600, that is 400. Okay, so additional provision for bad debts that is to be done is 400. Okay. See, make a provision of 5%. So we have to make a provision of 5% of 20,000, that is 1,000. But there is already provision entry of 600 rupees which is already been passed in the book. So the balance provision is 400. Salaries for the month of December amounting to rupees 300 were unpaid, which must be provided for. The balance in the account included rupees 200 in advance. Okay, so where is salaries? There are some adjustments related to the salaries account. So what I'll do, I'll put one dot here in salaries account. Okay, then insurance is a prepaid to the extent of rupees 200. Where is insurance? I'll put one dot to the insurance. Then provide rupees 800 for office expenses. So I'll put one dot to the office expenses also. Okay, then stock valued at rupees 600 was put by A to his personal use, for which cost has been not adjusted in the books of account. Okay, so stock has been used for the personal use, okay, at which amounted to rupees 600. So same needs to be adjusted in the books of account. So stock means purchases, your opening stock, that is cost of goods sold, needs to be adjusted for that 600 rupees. So let's see. Then closing stock was valued at rupees 6,000. So this will become in trading account credit side, and the next effect will be balance sheet asset side. Okay, so we'll see all the entries one by one. First what we'll do is, first we'll see all the trial balance and give the impact of all the balances which are available in trial balance, and subsequently we'll give the impact for each and every adjustment. Okay, now let's start. So let's start preparing trading and profit and loss account. Okay, one by one, sequentially from your trial balance. Purchases expense trading account. Now if you see, there is one dot near the amount of the purchases, that is there is some adjustments which are related to the purchases. Also there is a purchase return which needs to be reduced from the purchases. So we'll leave some space after putting a purchase expense. So purchases trading account debit side 15,000. So trading account, we have prepared a combined trading and profit and loss account here. So to purchases. Okay, since there are some adjustments which are to be done, we are putting it in the inner column. Okay, then keep some space here, okay, for the adjustment. Next is debtors personal account balance sheet asset side. Amount is 20,000. Okay, So debtors. Now there are some adjustments for debtors also. You have provision for bad debt which needs to be reduced from the debtors. So I'll put it in the inner column. Then next is interest earned. Okay, amount is 400, so it has to be profit and loss account credit side. So we have prepared a combined trading and profit and loss account. So what we'll do is trading account will end here, and then profit and loss account one line will leave for gross profit which has to be carried out, and then by interest on how much is the amount, $400. So interest on 400. Since there are no adjustments, we are taking it directly to the outer column. Next, salaries expense, profit and loss account debit side. Then there are two dots near the amount of the salaries, that means there are two adjustments, so we'll leave some space. So profit and loss account debit side, two salaries 3000. Since it has adjustment, we'll put the amount in the inner column. Then next, sales. Okay, sales is an income, so trading account credit side, sales. So by sales. Now there are some sales returns which we need to reduce it from sales. So we'll put the sales amount in the inner column. Sales is 30 to 100. 30 to 100. Next is purchase returns. Purchase returns, we are reducing it from purchases in the trading account. How much is the purchase return? 500. So purchase return less purchase returns 500. Okay, then next is wages. Wages is a direct expense, so trading account debit side 2000. Now since there are no adjustments, we will put that amount in the outer column. Then you have rent 1500, profit and loss account debit side, rent 1500. Since there are no adjustments, we are putting it in the outer column. Okay, then next is sales return 1000. Okay, we have to reduce it from sales in the trading account. So sales less sales return, amount is 1000. Next is bad debts written off 700. Okay, so bad debts, again expense, P&L will go there, bad debts written of 700. So profit and loss account debit side to bad debts written off. So how much is bad debts written off? Amount is 700. So 700. I am putting it in the outer column. Next, creditors. Creditors balance sheet liability side. Okay, creditors amount is 12,000. Creditors amount is 12,000. Since there are no adjustments, we will take it outside. Okay, then capital account. Okay, balance sheet liability side. Now for capital account, the way we present it, I'll show you. We'll have some opening balance. Now that opening balance is nothing but 10,000. Then we'll reduce some drawings. Then if there is some additional capital, we have to add it. And then we at last, whatever is the profit as per net profit as per P&L, we have to transfer it to capital. So capital, first I'll put the opening balance of 10,000. So on balance sheet liability side, capital, I'll put it as opening balance. How much it is? 10,000 in the inner column, since there are some adjustments which needs to be done. Then capitals, then what is the next one? Drawings, we have to reduce it from capital. How much is it? 2,400. So less drawings, 2,400. Then next, provision for bad debts. Okay, so you have to reduce it from debtors in balance sheet assets side, and there is one dot near provision for bad debt, so there is one adjustment also. So what we'll do is we'll leave one line there also for adjustment. Provision for bad debts, balance sheet asset side. Less provision for bad debts. Okay, how much it is? 600 as per your trial balance, and we have one line here for some adjustment of provision for bad debts. Let's see what it is later. Then the next is printing and stationery. Again, for printing and stationery there is one dot, so there is some let's see, printing and stationery, no, printing and stationery 800. Okay, there is no adjustment, so profit and loss account debit side. To printing and stationery, okay, amount is 800. Next is insurance. Okay, insurance's amount is 1200. There is some adjustment, so we'll leave one line there. To insurance, amount is 1200. So after that is written off to insurance. Since there is adjustment, I'll put it inside, and one then opening stock trading account debit side 5,000. So to opening stock trading account 5,000. There is no adjustment, so we are taking it to the outer column. Then next is office expenses profit and loss account debit side, there is one adjustment also, since we have put a dot at 1200, correct? So to office expenses, profit and loss account debit side. Debit side. Then the next is furniture and fittings. It's a real account, asset 2000, balance sheet asset side. So furniture and fittings. We'll put it inside, okay, since there is some provision for depreciation which is given. So let's see. So provision for depreciation, so reduce it from asset, furniture and fixture. So it's opening balance in provision for depreciation, and also there is one adjustment, so we have to leave one line for that adjustment. So less provision for depreciation amount is 200. One line here for that adjustment. Okay, now all the trial balance items we have, okay, included it either in your trading, profit and loss account, or your balance sheet. Now let's see all the adjustments one by one. Okay, now adjustment A, depreciate furniture and fittings by 10% of the original cost. Okay, so depreciation has to be rupees 200, 10% of the original cost. Original cost is 2000. Okay, since provision for depreciation is given separately, furniture and fittings will always be reflected in the original cost, and all the accumulated depreciation will be included in your provision for depreciation account. So your furniture and fittings is showing an amount of 2000, so that is the original cost. So we have to depreciate furniture and fittings at 10% of the original cost. Okay, so what will be the entry? Depreciation account debit to provision for depreciation account. So depreciation account being a nominal account, expense account, we have to add and transfer it to profit and loss account debit side. So the effect of this adjustment will be, see, always adjustment will have two effects. Okay, so depreciation, so profit and loss account debit side to depreciation amount is 200, and the second effect will be provision for depreciation credit side. So provision for depreciation is already having a credit balance of 200, so now additional provision will increase the balance of provision for depreciation. Okay, since we are crediting that account, so provision in balance sheet asset side, what we are doing is provision for depreciation is already having, so balance of 200. So what I'll do, I'll put it here as opening balance 200 plus addition depreciation for the year 200. So total provision for depreciation that will come here is 400 and not 200. Okay, this 200 will get cancelled and it will be 400. So instead of reducing 200, you have to reduce 400 now. Now the next, make a provision for doubtful debts equal to 5% of debtors. Now there is already some provision for doubtful debts. Okay, so how much is that provision for doubtful debts? It is 600. Okay, then we have to make some additional provision for doubtful debts of how much, of rupees 1000 now. Okay, so for additional provision for doubtful debt, the entry will be provision for doubtful debts expense account debit to provision for doubtful debts. Okay, now since this is a provision for doubtful debts expense account, we have just temporarily created it. Okay, so this will get transferred to your profit and loss account finally. So what are you doing is you are reducing the profit to make an extra provision of rupees 400. So this provision for doubtful debt expense account will go to your profit and loss account debit, and then your balance in provision for doubtful debts, which was already 600 rupees, okay, that will increase to 1000 rupees. You have to add rupees 400 to that provision for doubtful debts. Okay, so first effect of that will be your profit and loss account debit side. Okay, to additional provision for doubtful debts. Okay, so how much it is? 400, right? Then the second effect will be that your provision for bad debts, which had a 600 balance, will get increased by 400. 600 plus additional provision 400, so that will make it 1000 provision for doubtful debts. Okay, so now the next entry, salaries for the month of December amounting to 300 where unpaid must be provided for. The balance in the account included rupees 200 paid in advance. Okay, so now there are two adjustments for salaries. Salaries for the month of December amounting to 300 were unpaid. So salaries, there is some outstanding salary which for the month of December that are not paid for. So the entry for the unpaid salary will be, okay, your salary account debit to outstanding salaries account. How much will be the amount? 300. Okay, so this salaries account is already having some debit balance. Now you have to provide for more salary of month of December. So this salaries account will again be transferred to your profit and loss account. Correct? So entry will be profit and loss account debit to salaries account. Correct? So your salaries account will get increased by 300, and in your balance sheet liability side, outstanding salary is a personal account. Correct? So this balance sheet liability side, this will appear as outstanding salaries 300. Okay, so I'll give this effect, salaries account, first effect to profit and loss, add salary for December 300. Okay, and the second effect will be salaries liability side, outstanding salaries 300. Okay, now the next one, the same adjustment, there is one more. The balance in the account included rupees 200 paid in advance. So there is some advance salary which has been paid of rupees 200. So your salary account has that balance. Okay, so the entry will be advance salary account debit to salary account. Okay, now in this, since you are crediting your salary account, okay, your balance in the salary account will get reduced. correct, since the salary account is showing a debit balance. So one effect will be reduce it from your salary 200, and since it's an advance salary account is a personal account and which is showing a debit balance. Now advance salary account debit to salaries account, that will be the entry, right? So since the advance salary account is showing a debit balance, that will be shown in your balance sheet asset side, so we'll give that effect. Okay, so less advance salary, that is 200, and balance sheet asset side we'll put it as advance salary amount is 200. Okay, now the next one, insurance is prepaid to the extent of rupees 200. Okay, again there is a insurance which is prepaid. Okay, so prepaid insurance is included in your insurance, so entry will be prepaid insurance account debit to insurance. Okay, you have to reduce it from expense and add it to your prepaid insurance account. Okay, now prepaid insurance is again a personal account having a debit balance, so it will go to your balance sheet asset side. And to insurance account, insurance is already showing a debit balance, okay, of 1200 if you see the trial balance. Now if you credit insurance account, you have to reduce rupees 200 from your insurance in profit and loss account debit side. So to insurance, less prepaid insurance 200, and then in your balance sheet asset side I have to put it as prepaid insurance 200. Okay, then the next one, provide rupees 800 for office expenses. Okay, so provide rupees 800 for office expenses in the sense your office expenses, okay, it's for amount of office expenses is 1200. There is some additional 800 office expenses which is not accounted for, so you need to provide that office expense. So the entry will be office expense account debit to outstanding office expenses. This will be the journal entry. So since office expense account you are debiting, one effect will go to your profit and loss account debit side, you have to add it to your office expense. The second effect will go to your outstanding office expenses, your personal account, and since you are crediting that account will show a credit balance, so it will come in balance sheet liabilities side. So we'll give that effect. Outstanding office expenses 800. Okay, and here standing office expenses 800. Okay, now the next one is stock valued at rupees 600 what put to his personal use, the cost of which has not been adjusted in the books of account. So what A has done is whatever stock, okay, of rupees 600 valued matlab at the cost of rupees 600, okay, it was used by A for his personal use. Okay, so this is not related to the business, so the entry will be your purchases has to be reduced to that extent. Okay, so drawings account debit to purchases account, drawings account, debit to purchases account. So to that extent your purchases will get reduced. Okay, so one effect will be your profit and loss account, debit side, you have to reduce it from purchase. Stock used for personal purpose, how much is the amount? 600. The second effect will be you have to add it to your drawings, or you have to reduce it from capital. So you already have your capital here, so you have to reduce it from capital. Stock used for personal purpose, how much it is? 600. Okay, now the next one, closing stock was valued at rupees 6000. So closing stock, one effect will be your entry for your closing stock will be your stock account debit to trading account, correct? So trading account credit side, buy closing stock, how much is the amount? 6000. The second effect will be on your balance sheet asset side, correct? So we'll put it here before debtors. Stock amount is 6000. Okay, so now this, since all the adjustment effect are given, we'll start closing all the accounts one by one. Okay, so this will be, let's do the internal calculations first. Okay, so this net sales will be 3000, 32,100 minus 1000, this 31,100, then 15,000 less 500 less 600, so that will make it 13,900. Okay, so credit side total will be how much? 37,100, 37,100 less all the debit side items, that is 5,000 minus 3,900 minus 2,000. So your gross profit will be, since your credit side is greater, gross profit carried down will be 16,200. Okay, so here before interest earned, by gross profit brought down 16,200. Okay, here also we'll do all the internal adjustment. Salaries 3,000 plus 300 minus 200, so that makes it 3,100. Then insurance is 1,000. Then office expenses is 2,000. So let's total. So total of credit side is 16,600 minus total of debit side. So your net profit carried down is 6,900. So we add net profit carried down 6,900. So this total comes to 13,900. Here it comes to 1,600, 19,000. So total of liability side 27,000 and total of asset side 27,000. That's it. Thank you.